I own 300 shares of a company you all know and have all heard of, and it's called Amazon. It's a behemoth, it's a Goliath of a company, and it's one that's currently doing over $100 billion in revenue. And when I initially heard of the cost-cutting measures that this company is planning on doing, it was on October 12th of 2022, just 3 or 4 months ago, when I saw this titled article that said, "Shuttered businesses, canceled warehouses, and hiring freezes, Amazon is having a wave of frugality under CEO Andy Jassy." And that's when I began to realize that Amazon is finally starting to face headwinds it's never really faced before. We're going to talk in this video lots of things Amazon. We're going to look at each individual business segment. We're going to look at my portfolio tracker for my total portfolio balance, how much of this I have invested inside of Amazon, and then we'll talk about each individual segment as we talk about North America, international, and AWS, and all things Amazon. It's going to be a fun one. Let's go ahead and get started. But without further ado, I have to introduce you guys to MooMoo. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the NASDAQ under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. Keep in mind, like I said, this article that we just read the headline to was written on October 12th of 2022. Shortly after, just 1 month later, Amazon announced that it planned to lay off thousands of employees. The job cuts of approximately 10,000, which would start as soon as this week, would focus on the company's devices organization, retail division, and human resources. Now, something I might keep in mind that if you go through and read through this article, it talks about how a lot of these people that are going to be laid off are many of its high-end paid employees. Many of these people are making $100, $150, even $200,000 a year. So relative to the size of Amazon, 10,000 jobs might sound like a lot, but it's really not a major amount. It's enough to move the needle a bit. But something I might mention, if you look at all these categories, all these people that are getting paid by Amazon on this massive corporate headquarters, 10,000 employees to be exact, you can just take that number, you can take 10,000 and multiply it times 100,000. Let's say that on average it cost Amazon $100,000 per employee when you factor in their salaries, the taxes, the cost just in general of having those employees on payroll. You would get $1 billion a year. Now I would say that's even a bit more conservative, as many of these employees, like say in the corporate world, in HR, many of these software developers for Alexa and other products like that, I think many of them make over $100,000 a year. Many of them probably make 125, 150, and many things like that. And when you look at this layoff of 10,000 announced in November, that was pretty dramatic. And then the actual number ended up coming much higher, announced just a few days ago that they will not be cutting 10,000, they will actually be cutting 18,000. Now that is dramatically higher than what was initially announced. In fact, it's almost double. And the funny thing is that if you take the exact same, assume about $100,000 per employee, that's almost $2 billion in annual costs. And this is really interesting because if you look at Amazon, it is a company that was initially really profitable over the last half decade or so, and then this past year things have gone to the toilet in terms of profitability. Last year we did $14 billion in the negative, and then the year before we did $26 billion in the positive. That is almost a $40 billion swing in one simple year. And when this mostly came due to massive reinvestment and overhiring of employees. Now losses have started to shrink over the last couple quarters. You see the first quarter was negative $17 billion, then it decreased down to $6 billion, then decreased again down to $4.9 billion, and I think over the next year it's going to get dramatically better. Now keep in mind, a lot of this comes from employee costs. If you look at their actual segmented expenses, we take out research and development, we take out CapEx, which is a huge part for Amazon. Actually, they're the #1 in the world for CapEx, and then you take out sales and marketing. you can see that G&A, which is general and administrative, has been going in a straight line up every single quarter, in the most recent quarter reaching $3 billion plus. I think for the first time in a long time we're going to see this downtrend a bit as they lay off these 18,000 employees, and this is really going to help bottom line for investors. Now, top line has been growing quite steadily, and I expect this to continue throughout 2022. And speaking of which, we need to look at each individual segment, and it's interesting to see how this has slowed over time. Now, these blue lines right here, like this one that I'm highlighting, shows the growth excluding FX. That's what I'm going to be using as a reference because I don't want to look at foreign exchange. I want to see what the business is actually growing if you take out currency headwinds. Now, 13% growth in the middle of 2021 is pretty nice, and 13 was produced this quarter in the online store segment, but this kind of paints an unclear picture because really you're just looking at dates when they changed their prime day from last year to where they moved it to the third quarter, so that kind of screws it up. So don't really pay attention to that. Next one, physical stores. This makes up such a small part of Amazon, I don't even really pay attention to it. It's flat anyway, so I'm kind of going to skip over that one. Third-party seller services. These next four are by far and away the most important. The four that I'm highlighting right here. You see that third-party seller services was growing 34% about a year ago. Now it's only growing 23%. That slowed down. What about their subscription services? Was growing 28%. Now it's slowed down to 14%. The growth rate has slowed by half. Look at advertising services. 88%, now only growing at 30%. And then lastly, we have AWS, which is Amazon Web Services, and my most exciting part of the business was growing at 37%, is now only growing at 28%. Across the board, especially when you look at its most important segments, these four, third-party seller services, subscription services, advertising services, and Amazon Web Services, AWS, all four of those have dramatically slowed down, anywhere from 10 to 20% growth rates slowed on average, and you can see that it's primarily coming from the recession. Now, I only really care about the profitable segments of Amazon. I think that they need to get their cost cutting under control. I think that they really need to focus on profitability long term on its profitable segments, because these categories, North America, international, those are great and those produce some profits over the long term, and they are still growing generally speaking, but overall their profits are pretty minimal. If you look at some of the most recent quarters for North America, you see in 2021 you see a couple $billion of profit, in 2022 you see a couple $billion in losses, and then the same thing pretty much across the board for the international. You see some profitable quarters in 2021, very small, but all the money for Amazon is really coming from AWS. $2 billion a quarter in profit, $3 billion a quarter, $4 billion a quarter, $5, $6 billion a quarter, every single quarter in profit, and the margins are generally going up. You see that over time, you can see that margins are going up for North America, but it's in the low single digits. You see that margins are improving for international, but it's basically a break even. However, margins for AWS have gone from 24 to 28 to 26, and then now reaching almost 30% in the most recent year, and in 2022 they're going to be somewhere around 30 as well. Furthermore, the backlog for AWS has expanded, and this is the reason why I'm really focusing on my long-term projections for Amazon, mostly around AWS. Almost all the operating profit that I'm projecting in the future is almost exclusively coming from AWS, generally speaking around 70 to 80% of it. So what I really care about is if this company can get its losses under control from its retail business and then focus heavily on AWS. So generally speaking, I'm never going to be excited about employees losing their jobs, but as an Amazon shareholder, I have to say I generally think this is a good thing. I think that expenses have gone out of control, because the only thing that looks more impressive than this revenue number is how detrimental this expense number has skyrocketed. Just look over the last year how much their CapEx has increased. Look at this. If you compare last year's CapEx spending was $40 billion, which was already a double up from the year before, and then that $40 billion grew another 50% up to $61 billion. I think we're likely going to see a smaller number in 2022, and it likely comes from cost-cutting measures like this. But it's not just from employees. They're going to spend across the board less just in general. They're going to buy less buildings, less warehouses, less airplanes, less trucks, and less everything across the board, because this company needs to do just that if they want to get their profitability under control. There's a reason why this cash pile has started to go by the wayside, because losses are really starting to mount, and they burn through almost half of their cash pile in 1 year, which is something I don't like to see. But I have to say, buying right now Amazon at these prices I think is a steal, and buying Amazon at $80 a share, Well, I think this is probably going to be the last chance you're going to get to do that. So that's why I'm buying this stock. That's why I bought another 100 shares the other day. And it's one that I'm going to be holding throughout 2023. Thank you guys so much for watching. Check out MooMoo down below if you haven't already. Get up to 20 free stocks for signing up for their service and help support me and my channel. Thank you all for watching, and I'll catch you guys next time.